Escalating tensions between Russia and Ukraine threatening to overshadow Australia's local earnings result season. Why? Well, Evan Lucas here to explain now. He's the Chief Market Strategist at InvestSMART. Evan, good to see you as always. So we're midway through Australia's earnings season. What are the big takeouts to date?
Yeah, actually, on that point you just laid about sort of the threat between Russia and Ukraine, the ASX actually bucked the trend. We're the only market around the world that is actually up in February, which is interesting in itself with regards to that. And that is because of earnings. Earnings season has been incredibly robust. And the three main things to point out straight away, 76% of firms that have reported so far have beaten expectations and have beaten them pretty well. We've also seen the outlook for 2022 be much more robust and actually much more optimistic than was being forecasted originally as well, and firms are telling you that. The final thing to really highlight is also that firms are actually ready to spend. They've been spending through 2021, but they clearly point out that they are gearing up to try and get ready for the next adventures that they have across whatever industry they're in. And that is, you can see that from BHP, from CSL, you can see that in CBA. You look at things like Seek, all of them are saying the same things, that they are actually ready to spend to expand their businesses from 2022 and beyond.
Okay, today sees January's labour force data out. How low can unemployment go?
Well, the range is between 4 and 4.5%. So the last read we had for December was 4.2, so it's smack bang in the middle. What they are pointing out, though, is that there is a fairly messy understanding about how much the employment change will be. January tends to be quite a slow month anyway. There's a lot of holidays, obviously. A lot of people sort of tend to switch off. So it isn't necessarily a great month to be looking at. But expectations are that there will be about 15,000 jobs added in January to go on top with an incredible boom that we saw in December. And that, again, highlights that the employment market is starting to get to a level that makes things exciting from wages. Wages, we know, although they've been slightly slow, they're starting to move. And the further and further the unemployment rate falls, the more and more pressure on the upside you start to get on wages, because people have that ability to, and feel more confident to actually negotiate or actually walk out the door and find a new one.
Just on to interest rate increases, all the talk at the moment, there's varying degrees of when it might happen. Could be in a few months, could be towards the end of the year, could even be next year. But what's your view on this, Evan? Could we get one even before the federal election?
Probably not before the federal election. However, that is interesting that you mentioned the federal election. So the reason I say that, the RBA has made it clear, we just spoke about employment, that they need data. And the next major piece of data that helps them understand where inflation is going and where the confidence is going is that on May 18th, we get the next wage price index. Now, the very latest that the federal election can be done is the 21st of May. So that piece of data would be too late to see an interest rate rise happen before the federal election, but that doesn't mean that it couldn't happen these 2 weeks later on the first Tuesday of June. Look, my personal opinion is that the market has got a little bit ahead of itself. The expectation, according to the market, is that interest rates in Australia will be at 1.25% by December. That I would find very, very hard to believe. And the reason for that is that the RBA isn't there to try and put an unbelievably fast handbrake on the economy and sort of almost inverted commas crash it. So that I think is unrealistic. But to say it could be at 0.5 of 1%, I think is possible. I mean, inflation is now at a level we haven't seen since 2011. And back in 2011 was the last time we saw an interest rate rise. So we are in a scenario where we are seeing similar, areas where we did get a rate rise, but it won't be as hard as the market is saying, and it has got ahead of itself. But we should expect to see one, possibly two rate rises in 2022.
My money's still on Melbourne Cup Day. When something may happen. I'm not quite buying much earlier than that because of that reason, because the RBA has kept its powder dry for so long now.
Yeah, and that also gives you 3 quarters of data, 3 quarters of inflation, 3 quarters of GDP, 3 quarters, or almost 3 quarters of the wage price index, because the wage price index will come out mid-November. So maybe what catches you out on your call is the fact that they wait for that and they therefore go in December. So that is what some really conservative people are saying, and I actually completely understand that and almost agree with it. I think maybe this time they might give themselves 2 quarters of numbers. So therefore, September, October might be more the time. But I agree with you. For some reason, Melbourne Cup Day tends to be quite an active day. 6 of the last movements of rates in the last 20 years have come in that month.